In this video, we are going to be analysing MicroVision, ticker MVIS. To get straight into it, we're sitting just above $5. We have gapped up today, and you can see we're now holding above our 2-day anchored VWAP. Now, this is a good thing to see if you're more bullish on it. Whenever you're above this, you're considered bullish. Whenever you're below it, you turn more bearish. So it looks like we may be coming back to test it. As long as we can hold again, we're still good. It's going to be around 490. If we start to break below that, again, if I was long, I would definitely be cutting shorts if I'm looking at it from more of a day trading or short-term perspective. Now, though, to go over those key levels, what would I be paying attention to? So what we can see, we covered MVIS before when we were pushing these highs, because we said as soon as we came into these deviations, it's going to be short-lived. We were going to pull back, and that's exactly what's happened as soon as we came into these levels. So now what the key thing is now is, again, we are most likely going to continue this downward move. I'd be looking at a support around 375 to around 420. Actually, we kind of hit that 420, so 375 is that next target. But what usually happens with these, when you have a stock go from, $2 to $8, a near 400% move, what's likely to happen is, yes, you will sell off, but you will definitely get some bounces. And even when we do come back down to, say, 320 or so, you're going to get probably a relatively big dead cat bounce. So be cautious of these if you're short or long bias. Again, you need to be prepared for either direction, but wanted to point those out. So on the downside, again, we have targets 420 and 375. Now, these are our first deviation. So again, these levels are going to be quite key. You could consider that 420 already hit because we missed it by a few cents. But overall, it looks like that level held. We're getting that small bounce. We hit our third deviation. We're selling off once again. So now if we push lower, again, now looking at that 375 as a target. And if we break that, I wouldn't be looking to hold any shorts past this 325. The reason for that is this is our statistical mean, the closest of the two. This is considered fair value. So if I'm a short bias trader, that's always going to be my absolute final target, because once we come into here, again, we've played that reversal. It is now at fair value. So if we're trying to hold it short below here, then again, we need to be a bit more of a bias trader. We need to be a bit more of a, I guess, kind of a trend trader to play that downward direction, because again, that's fair value. Trading it past there, you're no longer playing a reversal. But those are the downside targets. What are resistances and I guess levels to pay attention near to where we are now? So we have 525, we have $6, we have 625, 725 as key levels. So again, if we zoom out and we take this onto a chart, let's say a 20-day 1-hour chart, we can start seeing how this reacts. Again, we break above these levels, we break through, resistance, pull back, and that's really how we use these. And as a reversal trader, as soon as we got to this level and above, very short bias, look for that downside move. Exactly what's happened. As soon as we broke this deviation, you can see we get that retest, and as soon as we held that retest, straight move down to that next deviation level. Again, a bit of hesitation into that level, snap straight back down to that next deviation. And again, right now it looks like you could consider this more kind of a retest of this 525 level, and it looks like we're turning a bit more weak as soon as we break below that 2-day anchored VWAP. 421 is going to be that target, and 375. And if we want to be even kind of more optimistic, and again, it wouldn't mean we hold the straight way to it, but 322 would be that next target. But again, if we hold into that, definitely moving stops, definitely taking profits along the way, because again, these are bounce locations. This could be the end of that pullback. So we always need to be cautious. We always need to be locking profits into those levels. So those are the key supports. We went through the key resistances. That's my main outlook on MVIS. If we break below, or when we come down to 322 or below, unless you're looking at it from an investment standpoint, investing at that point or below is ideal. If you're looking to invest, obviously do your due diligence on the fundamentals of the company. But from a trading perspective, not really looking to trade anything below that value until we come down to 220, which is that first deviation on the 6-month chart. So until we come down to there, this stock, I can't see any point in really trading, at least from how I look at stocks. Now, one thing I did want to note is on the 6-month chart, we are uptrending. On the 1-year chart, we are still downtrending. So whenever we see this, always going to be a bit less size, and the reason for that is, again, the two charts are diverging. If they're trading in the same direction, it gives you a lot more confidence in the trade. So that's one thing I want to point out is, again, that's why we're being really important in locking in profits along the way. And just as a heads up, I've completely got out of this trade now. I locked in the majority of my profits as we were kind of coming down. I think I locked them in around that 450 area. just because I was moving money to a different broker. So as soon as I liquidated that, I could also move that cash to that new broker. So I'm fully out of this trade. So again, what happens from now doesn't really affect me, but overall the key levels are still the ones that we went through just now. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.